Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast. This week on the show, I have Tim Vorhoff, Vice President of CreoValo, with me for a fascinating exploration of a growth strategy most financial advisors are ignoring, helping private business owners sell their businesses to unlock the tied-up value so they can achieve their next stage of life goals with the advice and guidance of their financial advisor, meaning you. It's a really interesting concept. I mean, think about it. Most of the wealthiest people in your community are private business owners, but many of these folks have relatively little in the way of liquid net worth because it's all tied up in their businesses. Yet a lot of these business owners in your community would likely welcome the opportunity to sell and move on to whatever's next. You are absolutely going to love this episode. Now, before we get rolling, make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit me up. I'm basically at Mike Langford everywhere. Or you can just shoot me an email, podcast@finsermarketing.com. Okay, let's get to the conversation with Tim Vorhoff. Well, Tim Vorhoff, welcome to the Modern Financial Advisor Podcast. So wonderful to see you.
So good to see you too, Mike. Thanks for having me.
Oh, my pleasure, my pleasure. So for those in the audience wondering, like Tim and I met at a conference here in Austin a few weeks back, and I was really thrilled when you came and sat at our table and you did the thing that I think everybody should do at a networking event like that, is you introduced yourself and you really just started talking about what you do and who you help and why it's important. And I could just feel like a passion. Like, this dude's not just some sort of random sales guy. You know, he actually, like, the conviction was flowing off you. So I wonder, I know, no pressure. I wonder if we could kick things off with you giving a bit of an elevator pitch for CreoValo to set the stage for today's conversation. Because honestly, I was hooked immediately when you started telling me. I was like, I love this conversation. So hit us. Give us an elevator pitch.
Yeah, pressure's on.
That's right.
So I think it's good to kind of set the stage. You know, there's the wealth management industry and the investment banking industry. And the two are very different, and they often don't really communicate together. Investment bankers are transaction-oriented. They want to sell companies, raise capital, and get paid. Financial advisors build client relationships, and they solve their clients' most intimate problems related to money. And for the longest time, wirehouses realized that there was a huge opportunity to partner the two, where financial advisors with business owner clients looking to exit their companies could partner with the investment bank. The investment bank gets a sale transaction, so they get their success fee. But most importantly, the wealth manager gets in front of the largest assets, period.
Yeah.
The sale of a company produces the largest movement of liquidity versus any other event. And it allowed the advisor to be the quarterback to that transaction, solidify the relationship with the business owner. Instead of it being a jump ball, with every advisor competing for the assets, it turns into a handoff. And so our whole model was taken to replicate an already existing structure at the wirehouses and democratize it to the independent space. And we wanted to make it better in every way possible, and I believe that we have. But essentially what we do is we provide a white glove service where we partner with financial advisors that have business owner clients or prospects looking to sell their company or raise money. And we've curated a network of ideally qualified and vetted investment banks, similar to how financial advisors use third-party money managers to meet their clients' financial objectives. We use third-party investment bankers, ideally qualified for the owner's objectives. So if the owner is a telecom company with $50 million in revenue looking to exit, we've curated a network and a database that has details on transactions done by specific individuals, where we can introduce those ideally qualified experts to your client, coordinate this whole process, and we do it for free. So if you're a financial advisor and your client wants to sell, we'd meet with you and your client, understand what does your client do, who do they do it for, what are their goals and objectives, where are they in pursuit of those goals, and then if we can be additive to that process, we're going to introduce a curated list of bankers who are going to pitch that client for the right to represent them in a sale. They're going to give them thoughts on what is the value of their company, what are their options, timing, buyers, market, all of these things pro bono in the attempt to win your client's business and the right to represent them in a sale. And so we do this all for free, and the client's under no obligation to hire anybody that we introduce, but we get paid if a deal successfully closes.
Yeah.
And we love this model because it's a better model.
Yeah.
So we don't ask for retainers. We don't get paid if you hire somebody. We only get paid if a deal successfully closes. So that means that your client hires somebody that we introduce, and they're under no obligation to. They can hire somebody else if they want. And that individual who they hire brings the transaction to your client that they deem acceptable. And they sign the paper, the money gets transferred, they pay that bank a success fee, and then that bank shares some of their success fee with us, and we will actually share some of that fee back to the advisor.
I love it.
So to put numbers on it, let's say you sold a $50 million telecom company, and the banker got paid, let's say, $1.5 million for a success fee. They did an extraordinary outcome for this owner. We would get 20% or $300,000, and then we would actually share 20% of our fee or $60,000 to the financial advisor upon the close of the deal. In addition to hopefully that advisor gets $50 million in liquid assets to manage over into perpetuity.
That's awesome.
So,
I love it. It's what's really fascinating. So, this is like really transformative, not only for the business owner, right? Which, like dramatically transform their life, but it's also transformative for advisory firms, right? I first heard about something very similar. This is what I was like glued on you introducing this concept at the conference. I'm going back over a decade. I was at a financial advisor conference, and I just happened to talk to one of the advisors, and it was one of those top performer events where like this guy's doing over $1 million of revenue or whatever it is, and so we started chatting, and he's like, yeah, we recently just really changed our business. We used to have like I can't remember, X amount of clients, and they were all relatively small, mass affluent, maybe some high net worth, but it was kind of a hodgepodge. And we decided, you know what, I want to dramatically grow this business. And so he started doing some research on private business owners in the city that he was in. And they started sending out these leather-bound binders, believe it or not. He's like put together like these pitch decks and sent them out physical stuff, FedEx style or courier style, to all these local business owners, and said basically, hey, here's a high-level pitch for us to help you sell your business, right? We're going to help you do it for free. We'll, like, all the stuff that you just described, like this is no cost to you. We'll help you get the valuation for the business. We'll help you find a buyer, yada, 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 all that type of stuff. All we ask is that we get the opportunity to manage the assets that are freed up, right? And he's like, it just completely transformed their business. They went from like, a couple hundred million AUM to over $1 billion AUM relatively shortly. And it created their focus. Like, this is what we do, right? And so I love the fact that you're doing this. One of the things that I imagine is really jumping out in advisors' minds, and I think this will help add some like awesome context, is the scale of this opportunity, right? Or this type of thing. Because, when we talk about the wealth management industry, we often really should be talking about the wealth held in marketable securities industry, right? Because wealth management really is all about stocks, bonds, and mutual funds for the most part. Some alts, right? They're not usually managing assets in private businesses or real estate for their clients. But a huge amount of America's wealth is tied up in private businesses. As you mentioned, the largest transfer of wealth you might see is when a business is sold. I did a tiny bit of Googling on this. I have some numbers that are rattling in my head, but I have a feeling you have way better data than me because this is your business. Break it down for us a little bit. Like, how much money is like in private businesses?
I see statistics all the time, and they're so large that they almost feel meaningless to me.
Yeah.
They're hard to like conceptualize what is the opportunity. But I think if we maybe dial in a little bit deeper, our solution isn't for the people that want to manage executive compensation.
Right.
Wealthy people at corporations, high earning professionals like attorneys or accountants or bankers. Our solution is for business owners and the advisors that want to work with that demographic. Because let's maybe, instead of thinking about all the wealth tied up in private businesses, which is enormous, let's think about the business owner. And if you're an advisor and you want to begin working with entrepreneurs and business owners, which in my experience are the most fun people to work with, they saw an opportunity, they put their money where their mouth is, and they invested years of their life to capture and create this company. And if you want to begin working with those clients who I think are the most dynamic and that can most benefit from a competent financial advisor, it requires advisors understanding how a business owner thinks.
Mm.
And so if you look at a business owner and you look at a pie graph of their net worth, and you see that they have, let's say, 2 million in liquid securities that you manage, and you only speak to that tiny sliver of the 2 million in liquid securities that you manage, you're missing the goose that's laying the gold.
Yeah,
The
for sure.
vast majority of a private business owner's wealth is tied up in the business. It's what they have the most agency over. It's what they invest all the profits of their company back into the business to grow it each year.
Yeah,
And so if you want to be relevant to those owners, any conversation needs to pertain to the goose that's laying the gold or the
sure.
business.
Yeah, I agree with that. It's funny. I interviewed somebody, let's say last year or so, and he was talking about how they help clients unlock value from their business, and he wasn't trying to help the advisor and the client sell the business. It was oftentimes, that $2 million that you mentioned that they might have in liquid net worth is actually way smaller than that. That there's many people who own very vibrant private businesses and they have next to no liquid net worth, right? Because it's all tied up in the business. And so his business model was they had trained themselves to be smarter at analyzing businesses and showing them how they could free up cash by either refinancing something within the business or just changing some things, giving them good, solid business cash management advice that would free up the retirement accounts or the whatever. And again, same type of dynamic. I want to be able to manage that stuff for you, which is great. It's a win-win for everybody. But I wonder, I do think it's important to kind of set because I do want to dive in deeper into the types of conversations advisors should have with business owner clients or would-be clients who happen to be business owners. But in terms of scale, what do you see in terms of the average value of a small business? You know what I mean? So that the advisors can start put it, because you think about a lot of wealth managers and they have we have a minimum asset size for clients of $500,000, $1 million, $2 million, whatever. They all have, some sort of minimum. And but most advisors want to grow their business and they would love to have some larger clients. So what are we thinking about here? Are we talking about $10 million businesses? Are we talking, what's the typical scale here we're talking about?
Great question. I think, again, it depends.
Sure.
There are the small businesses where we typically operate are kind of the medium-sized enterprises. So think we start at 10 to 15 million in enterprise value. Our typical deal is probably in the $50 to $75 million range. And so if you think about that from a wealth management perspective, if you land 5 of those clients, you're at $500 million.
Yeah, sure.
Or 10 of those clients, rather. Poor math on my part.
That's right.
And so it's less so. Every business is different, but what's most fascinating is it's the businesses you would never think about that are oftentimes the most fascinating to learn from, and the most unassuming people that have built these incredible operations. So, for example, I was working with a company that does waste management, and they basically dispose of hazardous waste. And this is a business that has extraordinary barriers to entry because they have to invest in essentially building the facilities that are highly regulated. And if you're dealing with hazardous materials, most neighbors don't want that in their backyard.
Right.
So it's very hard to get these facilities permitted. But they have built an extraordinary company. And what ended up happening was the father passed away. One of the passive shareholders has had to become active in the business to right the ship. And the majority shareholders, which is now the daughter who inherited the company, and now the active turned passive shareholder wants to stop running the company, they're trying to exit this business. And the financial advisor was basically there during this transition and introduced our services to be like, hey, I know you're trying to exit this. Why don't you talk to these folks that can get you in front of the right people? And we found 2 people with spot on expertise in this specific niche area of waste management. And they're both fired up to learn more, and they're both competing for this woman's business. And this was a case where, again, it's hard to put hard numbers on these things because every business is entirely unique.
Sure.
And so, but if you hadn't had a conversation on the business itself, it could have been overlooked. And this is maybe it's a $50 million business, maybe it's a $100 million business, but the beauty is in the eye of the buyer. And the goal of these investment bankers is to organize a competitive process. So if you had asked me, what would I pay for this business? I'd pay very little because I don't understand it very well. I don't understand who are the buyers, who are the sellers. But if I introduce somebody who's organized a sale process in this industry previously, they've spoken to the hundreds of potential buyers for these companies in the past. They have proprietary insider baseball knowledge on what all these buyers were willing to pay for. What were some potential roadblocks to the process? What were the due diligence concerns? And what's amazing is they're able to take what they learned in this private situation. The only person that had these conversations was that single investment banker, and apply that knowledge and understanding to your client's business. And that's what they did in this scenario. So they're able to take private proprietary knowledge, take what they learned from that process, apply it to this new client, and give them a really strong understanding of how would the market perceive their company. Because we always like to say, the value is what somebody is willing to pay for it. And when people get valuations done by an accounting firm, that's valuable, but it's not as valuable as figuring out what would the market bear for the company. Because again, the value is what somebody's willing to pay for. It's not what somebody comes up with using Excel or numbers or comparables. It's, if I go out and market this company, what will be the offers that I receive? And that's the whole value that we basically try to work for at CreoValo, is that companies receive better values when they're looking to sell, when they organize a competitive process to sell their company, rather than, business owners put walls up around their business.
Sure.
They're inherently paranoid about competition. They care about confidentiality, and buyers prey on that. Buyers know that sellers want to get a deal done quickly and quietly, and they prey on that. And so a buyer will come calling on a seller's door, a business owner's door, and say, hey, I want to buy your company. I've done an entire industry analysis, and I believe your business is ideal for X, Y, and Z reasons. We've developed a thesis, and you're perfect. And wow, and these sellers are blown away. They're like, wow, this sophisticated private equity group wants my business. They're going to get a deal done quickly. They're going to get it done quietly with none of my competitors knowing, and they're in awe of these people reaching out. But what these sellers don't realize is that private equity firm created a list of all the 1,000 companies that are in that industry and made a diligent effort to call every single one of them, send them the exact same industry thesis, give them the exact same pitch, and you just happen to pick up the phone on the right day.
Yeah.
And so our goal is, instead of just walking in to the mouth of the buyers, and one buyer is no buyer, and if you're only competing with one other person, the second that business owner signs a letter of intent, which basically outlines the transaction and grants exclusivity to the buyer, the negotiating tables shift out of their favor and into the favor of the buyer.
That's such a, like, it seems like business 101. Like, hey, listen, your work, the old saying, like in professional sports or whatever, or other types of entertainment, is like, you're worth what you can negotiate, what the market says you're worth type of thing. And part of the reason why you get paid more is, like, if there's more buyers, up goes the price. So if somebody comes to you and says, hey, we'd like to buy your business, like, that's really interesting. Maybe I should explore selling this business and find out what it's worth, because, you're not the only one who could be interested in it. One of the things that's interesting, and we've talked about this on this show and others, as it relates to advisors who are selling their business, or getting out of the business, retiring, what have you. And it's like, listen, for the advisor who's selling the business, chances are, or any small business owner, chances are this is the first time they've ever sold a business. They've never done it before, right? They've built the business. They've been spending potentially decades of their lives building this thing, right? It's their baby to some extent. The buyer might have bought multiple businesses over the years, right? So there's a distinct advantage there. That's why an investment banking firm is often so helpful, is because, like, we have conducted many transactions, probably hundreds, if not thousands. We know how this can work. We know where the negotiation points are. We know also deal structure matters. It's not just price, right? It's also the terms of the deals and so forth. I think this is so valuable for the advisor to have this conversation with their existing clients, but also as they go about networking their community. I mean, most advisors are still building their business locally, right? Now with the Zooms of the world and whatever, we can absolutely serve people outside of our local geography. and many clients may have moved and you're still serving them. But when you think about your local, I think about where I live right now. I live in the golf course community type of thing, but at the mouth of the complex, as you exit, there's several small businesses there, retail focused small businesses. Some of them are doctors' offices, some of them are restaurants, you name it, vape shops, whatever, that type of stuff happening. But like all of those are owned by, so none of these are public companies, I guess is what I'm saying, right? So these are likely small companies. There might be 2 or 3 locations or whatever. At some point in time, ownership transfer will happen, right? So really important conversations to have. How do you recommend advisors go about having these types of conversations? Again, let's start with the existing clients. Like, so they've got an existing pool of clients. Some of them happen to be business owners. How do they start getting the conversation rolling about the potential of exploring the sale of their business?
It's pretty simple. Advisors typically have built up a lot of trust with their clients. Their clients are sharing the most intimate parts of their lives with advisors, their finances. And so advisors are already in kind of that sacred, trusted position. And there's few professionals that are in that position with business owners if they're an existing client. And all it takes is a simple question: what are your future plans for the business?
Mm-hmm.
And chances are they're either going to grow it or they're contemplating an exit. According to the Exit Planning Institute, which grants the SEPA certification, over 50% of business owners plan to exit in the next 5 years. So they're thinking about it.
Yeah.
And if they're not thinking about exiting, they're thinking about growing. And our solution works for both of those. But it's really trying to take a more holistic financial planning view of your clients. So there's a lot of work done on their liquid net worth. It's just extending that same breadth of expertise that so many financial advisors have and just including the business into that conversation. They talk about their family. What are you planning for your kids? Are they going to college? Are you going to retire? What are your plans for the business? It's just increasing the conversation's breadth to include that part of their clients' lives. And they're already kind of there. They've already built the hardest component, which is trust. And it begins with that conversation. What are your future plans for the business? And then just listening to what the business owner says, because they'll tell you.
I always feel like it's, especially for the RIAs in the audience, fiduciary malpractice if you don't have that conversation, right? And I get it. Like your license is to, an RIA's license says they can charge a fee for financial advice on marketable securities. Pretty simple. That's what your license says you could do. But that doesn't mean you are only capable of doing that, right? Of asking the client about their other assets, whether that's your real estate holdings or in this case, small business ownership or medium-sized business ownership. Talk to me about what your plans are there. Because it matters, right? Like there's a whole bunch of different, like nobody lives forever. Father Time is undefeated, last time I checked. So at some point in time, either you're going to die and that business will transfer at some point in time, or you are going to decide I want to step down and I guess you could stay chairman of the business forever or whatever, or you're going to want to sell the business. And that sale can be a variety of places, right? It can be sale to people who are inside the company or it could be sold to an outside company.
Yeah. And I think the big thing to note is that, advisors have already built this really valuable position with their clients.
Yeah.
And it doesn't take much to extend the conversation just one step further. And it just begins by understanding that advisors do have a solution. If they want to sell their company, we partner and we're there to help the advisor quarterback that whole situation. Because we really believe that advisors are best suited to help quarterback transactions for business owners. Because if we look at the square of influence around a business owner, they have a financial advisor, an investment banker, a transaction attorney, and an accountant. And if we take a deeper look at the incentives of all those professionals, bankers want to get a deal done, period. They're kind of like real estate agents, but of a more sophisticated degree in some cases. If we look at transaction attorneys, they get billed hourly. They want to make sure that as much of the purchase price remains in the business owner's pocket as possible post-closing. The accountant is there to verify the numbers, to ensure that the bedrock of the analysis for the negotiations is solid. again, the financial advisor is the only person that works with the client before, during, and after a deal. They're the ones who know the client on a personal basis, that can put this money within the context of their lives, and that can help them financially and emotionally prepare for what life looks like post-transaction. And those are really important and valuable conversations, but they can also help make sure that all of those professionals are working in unison.
Yeah.
They can be the quarterback, making sure that everyone has the right information, that everyone's working on the appropriate things. And that position is just so valuable to a business owner because you're not billed hourly. Sure, you're going to manage the AUM post closing, but your ability to maximize that outcome for business owners. I'll give you an example. We were working with a financial advisor whose client owned a pharmaceutical lab testing business. And they'd received this is a story, so buckle up. They
Yeah,
had
let's
received an
go.
unsolicited offer from a strategic buyer for roughly $26 million. The business owner said, this is an awesome offer. I know these strategic buyers. I trust them. They're who I want to get the deal done with. The advisor said, hey, why don't you just speak to the folks at CreoValo just to provide some education? Our team met with him, basically painted the whole picture of, hey, here's what's going to happen if you go into a direct negotiation with a single buyer. He said, look, thank you. I know these folks are not going to do this. I trust them. They're the right folks. And this was in October. Fast forward 6 months, we heard back from this business owner. The buyer did everything we said they were going to do. They dragged their feet. They renegotiated the deal. They brought in professional team after professional team to conduct due diligence.
Yep.
And they came back and said, hey, look, we're going to pay you $20 million for this. So they brought down $6 million. And he said, look, I'm not interested in working with them, but I have another offer on the table for $22 million, and I want to hire a banker just to negotiate this one deal. They said, okay, great. We introduced a banker, and the banker started doing research, right? And they found that there was a publicly traded company that had publicly announced that they were looking to get into this specific segment that this business owner targeted. And so the banker said, hey, look, his name is Dr. Z. Why don't we just include this one strategic for this reason to increase some competition? Well, fast forward to about 18 months, that strategic buyer paid $60 million for that company. And the financial advisor who introduced us said, look, I've got a client for life. Before I even touched any of their money, I made him $40 million, right? Before I even managed a penny, I made him $40 million. That is a client I will never lose.
That's right.
And that's the position that financial advisors can take. They can tell the owners that, hey, look, you've built an amazing business, and to sell it takes additional effort. It takes time. It takes time to interview these professionals, to get them up to speed, to choose who to work with, to prepare for a process. This takes a ton of time and effort, but it's worth it. It maximizes the legacy of what these owners built.
Yeah. There's so much I want to unpack there. Number one, I'll just touch on the concept of somebody is going to have the plan in place or help with the plan of like what to do when you exit the business. Like, so whether you help sell it or not, you want to be involved because you want to know like what's the plan after. Like, you and your spouse, most frequently probably, or once this business is sold, you're going to have some form of large influx of cash. Is that going to be enough for you to live the rest of your life? Is it going to be so much where you start thinking about legacy things? Are you going to start doing some of those bucket list stuff you always wanted to do, sailing the world and buying the vacation house and the exotic location, whatever that type of stuff is? That's going to go into the financial plan. So you definitely want to be involved in stuff there. But I can't help but think about like how welcomed this conversation would be for prospective clients, from the financial advisor. Like, hey, we're specializing in helping business owners with this, and being able to kind of articulate, very similar to the way you did, like how important this is to start, even if you have no plan to sell this year. The process you just talked to me about was like a 2-year plus process because the first one failed and then there was another one or what have you. That is probably the most likely way this goes. I'm sure there's somebody came in and 6 months later, everything's done and buttoned up. But I'm sure it takes a little while, right? So having a conversation with a financial professional who's done this before, who's working with an investment banking team, I have to imagine that small business owners in any community would welcome a conversation from somebody who knows the process, right? Even if they're thinking about it in a few years old, like, okay, we work with, if I'm at the local chamber of commerce meeting and I meet business owners, like, oh yeah, well, I own a financial firm and we specialize in working with business owners, and our real specialty is helping them sell their business and making sure that they take care of their assets after the fact and da da da. Are you seeing advisors who are structuring their business that way? Because it really feels like a great way to go.
Absolutely. Well, if you think about where an advisor can add the most value, it's to business owners because they need the most help.
Mm.
They're managing a business, and the more professionals that advisors are able to introduce to a business owner that expertly solve their problems, the more trust they build with that client. Business owners are consistently inundated with problems, right? With
Mm-hmm.
things that they need to do. And a good advisor can understand that they are in a unique position to be able to organize those resources. And they also understand that it takes years to properly plan for an exit. There are a tremendous amount of tax strategies, tax mitigation strategies, trust and estate planning. There are things that can only be done years in advance. So much so that if a business owner calls their advisor and says, "Hey, I sold my company today. I got 20 million coming your way." There's nothing they can do at that point.
Yeah.
It's already closed. But if they're able to prepare years in advance, they can start assembling that dream team to surround that business owner with the best in class professionals. Because when they go to market, they're competing against the most sophisticated buyers in the world. Private equity firms make tremendous amounts of money for a reason. They generate 20% returns annually for their shareholders, 15 to 20%. They get paid very well for doing so.
Yeah.
And they have team after team of people whose entire job is to acquire companies for one price and sell it for a price that's greater than that.
Yeah.
That is how they make money. And so they can do that one of two ways. They can buy it for cheaper than it's worth, or they can grow it. That's how they make their money.
Yeah.
And if you're a business owner and you think you're going to get the best price out of the most sophisticated professionals I know in the world at buying companies, you're just outgunned. It
Yeah.
takes a team. It takes professionals, right? Business owners built their business by seeing the opportunity to provide a product or service that was superior to their competition. And I don't know about other people, but I can tell you, I have never been good at anything the first time I did it.
Yeah.
And it's the same when it comes to selling a company. You want seasoned professionals where there's no surprises, where they've seen everything and they know how to handle these transactions.
Yeah. And that is true on the investment banking side, and it's true on the advisor side. There's a reason why you work with a financial advisor. You could learn how to do all these types of things yourself. You could go on the internet and learn how to do asset allocation. Okay, I need to learn how to do tax prep. You could spend all those hours doing that type of stuff and hope that you don't screw it up, right? And hope that you have the emotional, dispassionate attitude, if you will, to, make a trade when it's not going right. It just because all right, it's time to get out. We'll cut our losses at 5% loss versus just riding it into the ground because you're like, well, I chose that stock. It's awesome. So I think the same is true when it comes to businesses, as you described. Having the professional in there is great. And I love the fact that you brought up the notion of like, look, if all of a sudden you have a windfall of cash, you sell a business and suddenly there's $20 million, there's all sorts of things that change, right? You're like, oh my gosh, to your point, the tax bill could be pretty substantial. You may want to have some planning for like making sure this money lasts. You may want to set up some trusts for your loved ones and what have you. You may want to figure out, are there ways to avoid paying taxes right away by flipping some of the proceeds into other types of investments or other type of investment or whatever. There's a whole bunch of things that happen. And so having a full-blown professional team makes sense. That's great. One of the things you mentioned to me in our prep call that I think is so important to cover here, and we've covered it from different angles as it relates to financial advisors, valuing their businesses and exiting either through succession planning or M&A, is one of the biggest hindrances to a business's valuation is lack of succession planning, right? Like that if something goes wrong with the owner of a financial advisory business, and he or she dies or is disabled, the value of that business can like rapidly depreciate. Like overnight, it can be worth like half, especially in this business where it's all relationships. Like you don't own any factories or patents on stuff. It's people and relationships. If all of a sudden I find out my financial advisor died, I'm quickly looking for, who's going to take care of my money, right? How should advisors address that concept, right? I mean, I know you mentioned to start talking about the business, but like, man, it could happen, right? Like, and so like, do you advise them to start talking about having a succession plan or what would be the sale, the valuation plan should something go wrong?
Yeah, we don't typically. I'll never tell an advisor what to do with their business.
Yeah.
Right. That's their MO. But we will tell you what creates a more valuable business in
Sure.
the eyes
Okay.
of a buyer. Right. So what you choose to do with your enterprise is your decision. But what buyers view in a company is they want to buy your business and grow it. And the price that they pay for your company is directly correlated to the price that they have to bear, or the risk that they have to bear, rather. So if you are a single shingle, one man firm, financial advisory firm, and let's say you have $1 billion in AUM, you've done extraordinarily well, but there's one advisor who has 100 relationships with phenomenally successful clients, and somebody wanted to acquire this business, they would look at it and say, well, there's a tremendous amount of key man risk or key woman risk. And since there's no real next gen leader or second in command, I'm going to require you to stick around post transaction for the next 5 years so we can hand off those relationships to someone else. And so you're going to have to take a deduct on the price that you could receive, and you're going to have to stick around to create a transition. Now, conversely, let's say you have $1 billion book and you built it and you have second tier management below you who actually manage all the client relationships so that you actually aren't daily involved in the operations. Well, you've actually created a more valuable business by doing so. You might be generating less profit, but you're actually worth a whole lot more because a buyer could look at that company and say, wow, I can buy this today and grow it. You are not involved in the daily operations. And so if I transfer ownership, the company's the same. But in the first scenario, if there was a transfer of ownership, the company is not the same. The company lost its entire revenue, and any buyer's ability to grow it is directly linked to the sole proprietor. And so when advisors think about building their business, it's important to think about how will a buyer view it.
Yeah.
And if there's key man risk, then they're going to deduct the price they pay from that because they're going to have to look at it. And it's an analysis, it's numbers. They're going to see, okay, there's one advisor that has 100 relationships. Based on our experience, it's going to take us 3 years to find an appropriate successor and to successfully transfer all those client relationships to that successor. This successor is going to cost X dollars. So we're going to look at how much profit you're generating, and we're going to see how much we're going to have to spend. We're going to deduct that from the price, and we're also going to force you to stick around and hit certain thresholds to make sure that our investment is what you say it is.
Right.
In the second scenario, those problems are already mitigated. And a buyer can look at this and be like, wow, I can immediately go out and bring in 2 other advisors and organically grow this business. I can take the leads that I have and use their brand name and their reputation and the processes that they've built to increase the amount of clients or to move upstream or to add additional services, right? It's all about looking at your business from a buyer's perspective. And the steps that owners take towards making their business more transferable directly correlate to increasing its value. And so all these things are just general drivers of business value in the lower and middle market.
I'm glad you shared that as it relates to the advisor's business because I think that's important for advisors to hear. Like, hey, if you're building a business, you're a business owner too, and here's some things you should think about. And I think the more that if they are involved in building their business and working with clients who are business owners, they learn more about this. And we have really been hammering on this podcast specifically about the concept of like running your business like a business owner, because many advisors get into this business and they get in from a sales guy or a sales lady frame of mind, right? They answered the call to be a financial advisor. They go out and build a book of business, but it's really just them. And then at some point in time, they might add an assistant or whatever. Relatively few of them convert to full-blown business owner, where you mentioned they've got other advisors on their staff that are managing client relationships. They may have a chief of staff who's doing a whole bunch of office managers and so on and so forth. That's when you get into true like enterprise value. And the way you were talking about that, it made me think, if I'm an advisor and I'm looking to work with business owner clients, you just kind of help me outline target value for like, who am I looking for, right? Like I may be looking for mom and pops are fine, but I don't want it to just be mom or pop business owners that I'm looking to like work with. If I'm going out looking for new businesses, like who would I look to try to attract as a client? And therefore knowing that at some point in time, they're going to sell the business. Does your firm or have you thought about like certain types of guidance for advisors, like who are looking to grow their business this way? Like what are some of like the bullet points they should be looking for? Like, hey, go out and talk to these types of business owners in your community. Here's how you discover businesses in the community who might fit a certain profile where they'll be likely to be looking to sell at a certain point in time. I'm sure age bracket comes in there. Do you offer any of that type of guidance to the advisor community that you're working with?
Yeah, it's maybe not exactly what you think. To build trust with a business owner is an extraordinary endeavor, especially if they have a very successful business. They're inundated with people trying to sell them something or trying to help them. And they have to use some type of filter to figure out who is actually trustworthy or not. And so what we typically recommend is, I had mentioned kind of that square of influence earlier. Instead of focusing on meeting with business owners, I try to focus on building my repertoire of professionals who expertly solve their problems. Because if I want to work with business owners, I need to know what problems do they have and who solved those problems. Like, what is the role of an outsourced CFO, and what are the problems that owners experience that signal that that's the help that they need? What are employee contract issues or employment agreements? What are potential disputes between owners? What are insurance issues? What are accounting problems? How can I build my roster of incredibly talented professionals and leverage them as a referral base? So for example, instead of focusing on meeting with business owners directly, I focus on how can I better understand the local group of professionals that I can meet with, how they deliver value to business owners, and keep them in mind when I meet an owner with the problem that they solve.
Yeah.
So that way I get to introduce that person who solves the client's problem. I look excellent because I introduce somebody that is an expert at that issue. And then that advisor gets to see how I work with business owners. And in return, they might want to refer me more business, right? And that's how it kind of works. It first requires understanding that we have to solve business owners' problems first. We can't just go after business owners and say, I have a solution, listen to me. It's how can I listen to them, the problems that they're having, expertly solve them, and then allow the actions to produce reverberations.
Yeah.
If that makes sense.
It makes 100% sense. I've talked about this a little bit from different angles. I always call it going native, right? Like you need to be a part of the community that your target client serves, right? And in this case, you want to serve business owners. Okay, great. Well, who else is in that community? How can you become a hub, like a center of gravity for that community? There's a bunch of different ways. To your point, you mentioned a whole bunch of like common problems that business owners may have. Great. Can I assemble like some other sphere of influence partners who solve those problems? What kind of content can we put out there? Is it a podcast on certain topics? Is it regular meetups, like for small business owners who want to come and learn from the community of service professionals? There's a whole variety. Could we just do a newsletter that goes out, once a week? We have a newsletter on common small business problems, and we've solicited advice from all the local folks who could help you with that stuff. It's really fascinating. But I think at the core of that is you have to be seen as the resource, right? You want to find yourself, because it's way easier to bring on business inbound than it is to go outbound and start banging on doors like, hello, Mr. Business owner, I'm Mike Langford from Walla Walla, Washington, and I want to sell you a vacuum cleaner. Looney Tunes reference for the old heads in the audience, Walla Walla, Washington. Anyway, this has been fantastic. One thing I want to ask you, what have been some of the biggest surprises that you've discovered since you've been doing this? Like, because I imagine like you get into this type of a business, you're doing it for a little while, you're like, wow, I didn't expect this. Like, and the surprise can be positive or negative, and, like just things that have kind of like, oh yeah, I didn't think about that.
Yeah, I came into it from like the institutional investment banking background. So I was working for the largest private equity funds, negotiating against from hedge funds like Elliott
Yeah.
Global Management in restructuring transactions, which for people unfamiliar is just a mess. It's bankruptcy situations where billions of dollars are being wiped out and private equity deals have gone wrong. And so I was working with institutions primarily. And I think the biggest surprise is just how enjoyable it is to work with entrepreneurs and how exciting it is and fun that it is so rewarding to meet these people that through one way or another are just experts at their domain.
Yeah.
They're not often, we often think of entrepreneurs, or at least I often think of entrepreneurs as like the tech people.
Sure.
But I think this job has completely changed that perspective. Is it's just everyday people.
Yeah.
They're folks that saw an opportunity and just started going after it. And they're just a lot of fun to work with. And I feel very lucky to be able to work with these folks and to solve their issues and to develop these relationships that last a long time. And I just wanted to make one final comment on that earlier point. You can go after one business owner, but the second you win that one business owner client, you have to then go out and win another one. The benefit of building a strong bench of professionals is that it actually represents recurring revenue or recurring business.
Yeah.
To the extent you make that advisor look great in front of their client, I can tell you that when I introduce somebody and they're responsive and they do a wonderful job for the client's like, wow, I really enjoyed meeting with them. I'm going to introduce more folks to them.
Right. Yeah. For
because
sure.
it's that simple. And so if we can develop that roster and do great job for the people that introduce us and vice versa, it's just mutually beneficial. Everybody wins. And so the biggest surprise is just how much fun it is working with entrepreneurs as opposed to institutions. I think the other thing that I don't know why I was surprised was just how sophisticated financial advisors are and how great they are at developing relationships with clients.
Yeah.
Like they really have some of the deepest client relationships that I've seen. And they really are in an ideal position to begin having these conversations. There's attorneys and accountants, but the relationships that advisors have feels really differentiated, that they're really in this position where they actually get into kind of the intimate details of their clients' lives and build a degree of trust that I don't often see in other domains. Again, coming from an investment banking perspective, we're very transaction oriented. We want to maximize the outcome, optimize the deal terms. We want to create competition and we want to get the deal done.
Yeah.
Right. But the advisor cares about the client. And it's really wonderful to work with folks like that really care about the client and that have built, relationships over decades.
I love it. I love it. No, that is a pleasant surprise because you're right. When you're dealing with large companies, you're often very removed from the person who had the vision, the person who put in all the work to get the thing going. And, in these smaller companies, they tend to know all the employees. They tend to be a member of the community. And like you said, they tend to know other business owners. So solving the problem and helping one, chances are you're going to meet others in the community. Fantastic. Well, Tim, this has been a fantastic conversation. I know people are going to want to follow up with you. We'll get the CreoValo website linked up. You're active on LinkedIn. I know that for sure. Where else can people follow along with you who want to learn more?
I think LinkedIn's a great place to start. We're regulated by FINRA, so we have our own broker dealer. And so publishing things takes time.
Yeah.
But my whole goal is to help advisors build these relationships with business owners and to help empower them to begin having these conversations because I just think they're ideally qualified to do so. And they have the horsepower, so to speak, right? They're dealing with really complicated things already, and a business is relatively simple compared to the things that they deal with, right?
Yeah.
And so I kind of look at them as ideally qualified, but just want to try to help give them some education and help them understand the business owner a little bit better. And I just try to put that out on LinkedIn, and happy to connect with anyone if they want to chat further.
Sounds great. All right. Thank you, sir. Great having you on the show.
Thank you, Mike. I appreciate the time.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge thanks to my man, Tim Vorhoff, for coming on the show. Loved meeting him at the conference here in Austin and just digging into this area that I've frankly been nerding out about for years. And I just loved having somebody else who is an expert on it come on the show. Awesome, awesome stuff. As I mentioned at the top of the show, if you haven't done so already, please do subscribe to the podcast on your favorite podcast platform. And give us a like, by the way. I mean, let other people know about it. Share it on LinkedIn, wherever you hang out. Be great to get the word out about the show. Okay, that's all I have for you. Please make sure you're being nice to each other. We'll see you next time on the Financial Advisor Podcast. See ya.